Welcome back to another Ticks and Trades daily recap. Today is Monday, March 24, 2025. Sam Morton at your service. Let's walk through the action we saw in the SPY today, the levels we mapped out in advance, how things played out both by the rules and my personal trades, and of course, we'll check in on the metrics and where we stand heading into the last week of March. Let's get into it. Starting with the big picture, on Friday, price in the SPY closed above the top of that key zone that we've been tracking, and that gave the bulls a solid setup heading into today. So no surprise then that we saw a gap up at the open. That was well within expectations based on what we know about what can happen when price and time converge. Being long was the default plan for the day, and the bulls took that and ran with it. Most of the session saw upward movement, and the rally started out right at a level we had marked before the open. Price went higher to the next level we had on the board, and it happened to align with the 200 period moving average on this daily chart that you can see here, which is an important point of interest. What was a little unexpected was how shallow the pullback was from that area, from the level and that 200 period moving average. In terms of percentage and structure, it really wasn't much of a retreat at all. The bulls held pretty strong. And where did we close? Just a few pennies away from that level that we had on the board this morning, which we'll look at next. So once again, the market respected the map. We'll move on to the daily levels in the game plan that were sent out to subscribers before the bell. Today's layout was structured to offer opportunity in either direction. A lot of levels on the board. Ideally, we were looking for price to move down into support after our 15-minute no trade window ended, which is 9:45 a.m. Eastern, and from there catch a bounce and ride it higher. That would have been the cleanest scenario early on. As it turned out, one level did get touched after that window closed, and per the rules, it produced a base hit, what we define as a 4-point move in the ES, enough to count as a successful trade. But first, if you're following along and trading with our levels, make sure you're reviewing the game plan each morning. It sets the tone and gives you structure to work from, no matter how price moves. Now let's zoom in on the 1-minute chart and walk through what price actually did. Price opened just under this new zone between 571.08 and 570.85, pulled away for a few minutes, and then wasted no time pushing higher. Since it never came back down to retest that zone, the long trade setup there did not trigger, so we waited. The next level up on the board was 573.98, and sure enough, price made its way there later in the session. That triggered the counter trend trade setup, completely valid when you have a well-defined level of resistance, overhead resistance. The operating level to trigger the short trade in the E-minis was 573.93, 5 cents off the original level toward price. The short at 573.93 handed over a base hit as designed. Even though the reaction was larger, we're counting this trade strictly by the process, which means we pull 4 ES points, close out the trade, and move on. And because it was touched once already, that level was off the table for additional short trades for the rest of the day. So if you didn't get a long setup early, the short at 573.98 was the next best move, really the only move, and it worked. Now let's talk about my trade, or lack thereof. In the interest of time, I have the recording queued up to right before the SPY hit that 573.98 level. You can see my order, where I initially had the trigger to sell ES contracts if the SPY was greater than or equal to 573.93. That was by the rules. Then I changed my mind a little later and adjusted the order to go short at 574 even. Instead of using our usual 5-cent buffer to pull the level down toward price, I actually pushed the trigger up to 574 even. So my thinking was that price had been hovering under that level for a while, and I figured if they were going to test it, we might see a little spike through before the drop, so I gave it room to breathe, and I was wrong. Price respected the original 573.98 area just fine, and the reaction came down from there. So my order never triggered, and once price fell away, I had no interest in chasing it. So for me, flat line, no trade taken, that's fine. That's part of sticking to the plan and staying disciplined. However, if I had played by my own rules and added that 5-cent buffer, I would have gotten into that short trade and pulled at least 4 points. But it was what it was. Curious if anyone out there who had this level from the morning went short there and made some money, or perhaps you even went long early on and rode the ride up. Feel free to leave a comment if you'd like to. Let's wrap it up by looking at the tracking logs. First up is playing by the rules. If you were following the process exactly, you had one clean base hit for 4 ES points. That gets added to our cumulative performance. And a question I have is, will we hit 70% rate of return by the end of March? It's possible. We've got one more week to go, and we're close. It's going to come down to execution and patience. No rushing, no pressing. And really, it's no big deal if we don't get to that milestone. We will know soon enough. Next up is the Sam's Trades log. And there's really not much to report today. 0 points earned, but also 0 points given back. Still in the game and still focused. So that's a wrap for today. Thanks again for watching and for supporting the channel. If you find value in these recaps and want to keep sharpening your edge, hit that subscribe button and give this video a like. And again, if today's levels and game plan helped you grab a win, I'd love to hear about it. Drop a comment below. Let me know how your session went. Thanks again. I'll talk to you tomorrow. Have a great day.